Well, hello, everyone. We are now live at the intersection of real estate and data, or should I say big data. This is harnessing big data for real estate success, aggregation, and analysis demystified. And that's really one of the goals for this webinar, is to demystify AI, its aggregation, its analysis, and other concepts related to it. So if you're looking to learn more about the world of data, you're in the right place. Now, this is the first webinar sponsored by FIBREE for the new year. And FIBREE is the Foundation for International Blockchain and Real Estate Expertise, FIBREE.org. It's an international organization devoted to all things technology and real estate, that is prop tech. My name is Dean Markunas. I'm a board director. And I am the principal consultant for a company I have, which is Power of Chain Consultancy. And we advise startups in the real estate space and technology space. It's still early in the year, so I think we can, on behalf of myself and FIBREE, I'd like to wish everyone a prosperous and successful 2025. So cheers to a new year and another chance for us to get it right. The webinar will be about 60 minutes. If there's continued interest in this, we'll go a little bit over that to another 15 minutes. It is recorded and it will be available later. We encourage audience questions throughout the discussion. And in terms of the format, I'm going to ask each panelist to give them a brief introduction of themselves, or I'll do the brief introduction, and my panelists will then describe later what they do, what their company does, and how it relates to data. And a lot of the research that I put into this and questions that I have relate to a thesis I'm writing on AI use in the real estate industry. And that thesis is supported by 3 pillars. The first pillar is digitization, which creates data, which is growing. And my understanding is that the real estate industry is way low on the poll in terms of its digitization right now, and we're at 30% capacity. So we're at a huge growth curve for the real estate industry to improve its digitization. The second pillar of this thesis is advanced AI algorithms, which basically look for data and aggregate data and help us analyze it. And the third pillar related to this thesis of AI use and data use in the real estate industry is simply the real estate industry itself. It's unbelievable how big it is on an international scale. The numbers I get for real estate, for land, residential, and commercial internationally vary. But here in the US residential market is about $49 trillion right now, 47 trillion. As of the end of 2023, and the commercial real estate market at the end of Q4 2023 was 23 trillion, and it will have a compound annual growth of about 36% up to the year 2030. So that third pillar supports, I think, this growth in real estate and the need for digitization and obviously the AI tools to aggregate, find that data. So the first panelist is that I'll mention is Matthew Schneider. Matthew is a founder and CEO of a company called Building, Inc. He describes it as a data-driven tokenization company, and his company is also a corporate member of FIBREE as of 3 months ago. Jo Bronckers. Jo, thank you for coming in zooming in from the Netherlands. Jo is the FIBREE president, and he's a specialist and expert in the European Union, especially on the circular economy, which we'll be learning a lot more about. Doug Newell, thanks for coming in, Doug. And Doug is zooming in from North Carolina, and he is the founder and CEO, and he's a data scientist. And I scoured the earth looking for a data scientist, and I found probably one of the best. And he is the CEO of Swarmalytics, an AI data prop tech company. And then we have Harold Hurd zooming in from Texas. Thanks so much, Harold, for coming in. And Harold is the founder and CEO of Stone Arcs. And this is a new blockchain-based transactional company, which has loads of data, that will have loads of data flowing through it. And I think, Harold, you'll help us understand what that's all about and the event that you might want to mention. Let's see. So anyway, going back to Matthew. Matthew, describe your company and what you're doing there, how it relates to data. And my first quick question is building in the Building Inc. a verb or a noun?
Excuse me, good morning. That's a really great question. Well, first off, it's great to be here. John, thanks for thinking of me and putting us on the panel. Data-driven tokenization is our thesis. And so what we have to do is with data is sort of embedded into what we're trying to transform in the tokenized economy. Regarding being a noun or a verb, I think it can really be used as both, right? We're building buildings better, but we're also trying to represent the building in its entirety across its life cycle. And as simple as a name as it is, I think it's perfect. It gets lost in the SEO sometimes, but it is unique, and I think it really encompasses what we're trying to do, tying property data, full life cycle management, property intelligence together and into one platform, one location for stakeholders. It really eventually could become the only building software that you need. So data is a very important part. We help collect, credential, structure, and deliver that data to stakeholders. We use several different tools in doing that, and we'll dive into what all those are later on.
Fantastic. Okay. And Harold Hurd,
Hey, so thanks. Yeah, absolutely. So real quick, StoneArc is it is the next generation of real estate transaction platform. It's designed to streamline the buyer and seller process, initially for commercial properties. We're operating this without intermediaries. We're leveraging blockchain and machine learning and AI as we create that secure, efficient, and transparent marketplace where buyers and sellers, funding sources, government entities interact seamlessly. And what's core to this is we're very straightforward. So what we do is we charge a 1% listing fee, a 2% closing fee on a sliding scale with subscription tiers to embrace and enhance some of those features. So StoneArc is eliminating those inefficiencies in traditional transactions. Our digital ledger technology enhances the trust. The AI-driven brings insight and optimizes deal making. In real-time data interaction and enhancements enhances that due diligence process. So whether you're a property owner looking to sell with confidence, or a buyer seeking to verify those opportunities, or an investor wanting a data-driven edge, StoneArc is the future of CRE transactions. With that, we're launching here in Texas February 1st. And so, we're going to transform the real estate industry one deal at a time, and this is where it'll start getting done. So take a look at us. We're at stonearc.com.
Great. Thanks, Harold. And I met Harold. I've been following his progress for the last 2 years. I met Harold through the Texas Blockchain Council. And I think, did you want to put a date on that? I think he's launching officially February 1st, if I'm not mistaken.
In just a couple of days, quite frankly. And we're very
excited about that. I really am. Jo Bronckers from the Netherlands. Who are you and what do you do with the circular economy out there in the European Union?
Yes, actually, since we started with FIBREE, John, we have been doing several projects with FIBREE. Actually, one of the things FIBREE does is consultancy services, and I've been involved in many of those projects. It started in 2019, where we did a project in the Netherlands. How can we create more data interoperability? How can we get rid of data silos? And how can we connect the dots in a more automated way? But then later on, I was involved in UK, in Germany, Netherlands, in different circular construction projects. And there I learned that data, having good quality data, is really an enabler for creating entirely new value cases. And imagine that we live in a world where there's a big growth of population, and the demographics is only increasing, but also the wealth of people is increasing, and therefore the demand to higher quality buildings. This puts a lot of pressure on the available materials. There's a scarcity, and this is a driver for higher prices. Well, at this moment, what we learned is that if you're lucky, 10% of materials can be reused. But what if we can increase this by having better data so that you know on the moment when it was assembled, how it can be disassembled and can be reused? If we store those data along the life cycle of a building a better way, then we can increase this 10% maybe to 20 to 30. And imagine if you can do this all over the world, how big this business case can become. Well, what drives me is make this happen.
Okay, excellent. We'll learn more about that in a little bit. And in a few minutes, I'll ask you to bring up your slides. But Doug, do you want to mention who you are? And
There we go. I'm unmuted. Okay, I'm Doug Newell, and I'm a serial entrepreneur. This is company number 7. I've spent pretty much my entire career chasing the wave of big data. Big data keeps getting bigger, and what my company Swarmalytics does is we apply proprietary AI algorithms to sort through massive amounts of data to make predictions. So, for example, we have about 16,000 pieces of information about every property in the United States. We use all that data and do various things. One that we're doing right now is we are predicting the probability of some sort of natural disaster occurring, and we do that at the individual rooftop level. We predict which houses are going to be turned into rental properties, which ones are going to be flipped, which ones are going to be sold. If they're turned into rental, what will the rent be, and so forth. So we take all this big data and cook it down into something useful, like this house is likely to be flooded next time there's a big storm.
Yeah, this is absolutely fascinating. I had a chance. Well, I met Doug through the U.S. PropTech Council. He's a member. As well as FIBREE. FIBREE is a strategic partnership with the U.S. PropTech Council. I met Doug through the AI forum with the U.S. PropTech Council, or actually, I call it an AI workshop. And I saw his full demo with the help of Lucas, and it was absolutely very, very impressive. I'm going to jump back to Jo, if you want to tee up your slides to further explain the circular economy very quickly, though, if you could do that. And then, Doug, we'll go back to you and Lucas for a snippet of your demo.
Okay.
Here are my slides. Voila. Now, the story that I told, what if we can apply circular economy principles to the constructions, to our buildings? And circular economy, many people do not really know what you're talking about. Often you think, how can we reduce waste from buildings? But then we're doing waste management. What we actually want to do is circular economy. How can we, at the beginning, when you take initiative for a building, so when you start designing, how can you already design it such a way that after, on average, 60, 70 years, when the building will be demolished, or during the use phase, when there will be interventions, maintenance things, if it is designed in such a way that materials can be taken out and be reused or refurbished, but reused in a high quality. How can we preserve the value that goes in? That's actually, in my understanding, a circular economy. And to enable this, it is very important, the data management, because what I said, a building, the average life cycle of a building in Europe, here in the Netherlands, is 70 years. It all starts in this screen on the left, and that's where the design phase is. So you have an architect, you have a construction firm, they work closely together to put the idea of the building into a realizable plan. And therefore they use BIM information, or they use material passports, the specifications of materials that they put in. Are you going to go for wooden window frames, or for aluminium, or for plastic? Those kind of things. But that's the design. That's how the building was designed. Then you go to the municipality, they issue a permit. You want to know how it was permitted. Maybe there's something changed in the meantime. And then the moment it is constructed, then you arrive at the top of the screen. Then you would like to know, okay, how it was designed. We know this, but is it also accordingly being constructed? Can we take a screenshot of the physical status on the moment the building is ready? Well, when you have that, that's all relying on data. But then the long lifespan of the use phase starts. And then it's not only that we want to know the BIM, the drawings, but maybe also how can utilities be used. If you want to be flexible with one utility connection, you want to know which of the tenants are using what utilities. Or maybe you want to do some tenants management, or in Europe, ESG reporting, have some data so that you can disclose. And more important, if you want to create this value case, in the bottom, when you arrive after 60, 70 years that you're going to disassemble, how can we somehow have the reversed assembly drawings so that you know how to disassemble your building again and how to preserve the high quality of your materials. Imagine a steel beam. On the moment it was constructed 60 years ago, you knew the quality. But if you do not administer this in the right way, on the moment after 6 years you want to disassemble it and you don't know the quality, actually everybody takes this as unknown quality and they're going to remelt it, very intense label, it's actually downgrading. But once you were able to put the information in the circularity passport, it was available at that moment. So what we did, we created a structure where the public information that you want to keep with the building is put in a circularity passport in the middle. And then along the life cycle, you can update this. So every moment in the life cycle, you have the latest update of information. And okay. What is information in the second slide? Actually, what you see here on the left is exactly the same. We separate the public data from the private data of every contributor. The private data stays private. That's not necessary to share that, to keep it with the building. And the public data is what we put in the building passport. That's what you see in the left. In the middle, the idea, why is this becoming interesting? Well, the building, an average building, is not staying the entire life cycle with one person. You sell it to somebody else. What if you go to the notary and you sell the legal ownership of a building to a successive owner? What if we can also sell the data that we collected, the digital twin that we created? Well, what if we can sell this at the same moment to this new owner? Then he can continue collecting data, and the data track that you have, you can continue working with, letting that help you support your decision making. So we thought if we can put this circularity passport on an NFT, then you can go to the notary for the legal transfership, but also hand over the access to the NFT, and they can continue to collect data, aggregate data, and put relevant data that needs to stay with the building in this building logbook. And therefore, we created an entire architecture, and that's what actually we're now deploying at the several projects.
All right, thanks. Yeah, we're going to have some more questions for you later, I'm sure.
Yeah.
Before I jump back to Doug, Matthew, why don't you describe your new platform? You're tokenizing assets, but data plays a big part of what you're doing. Describe your aggregation process and what you're going to be doing with the data that you aggregate, collect.
Absolutely. Well, it has a lot in common with what Jo just described, which is you have the actual value of an asset, and you can realize this when you finance the assets, refinance, or sell it. But then you have the intangible, you have the data and the information, and the value of this is generally very unrealized. And that's just because our current technological systems, it's hard to calculate this and to manifest that value. But what you're seeing now is when you take digital twin technology and you have all of this information and validated information, you're able to wrap that in a sort of financial instrument. And this is what a token has become. It's not just a new subscription agreement that says you're an owner in a property. This is something that has depth to it. It's a layer of intelligence. And so we decided if the economy is moving towards something tokenized, it should come with a lot of information attached, a lot of value add, a lot of data to drive the value that's actually being traded in these tokens, right? Because if we just add technology on top and we don't know what the technology is doing, then we haven't innovated. We've just created new business models. And there's a real opportunity to infuse finally data into the transactions that we're making, especially in real estate, where one real estate asset is not the same as another. We have to investigate what makes it valuable and to have that digital twin component or those data rooms attached to what we're buying, selling, and trading.
So Matthew, so the principle here is that you're going to be tokenizing an asset, and tokenizing that building, if you will, you'll extract the data and for your data program. And how do you monetize that data?
Well, it comes in a couple forms. The first monetization of the data is just how it's reflected in the valuation of the assets. And this comes in two monetization formats. First, you can remove discounts. As Jo was describing, if you don't know the state of an asset or materials, this introduces concern and contingency, especially in complex systems. If you take HVAC, for example. So if there's an absence of data, we don't know when something is going to break. And so naturally, we assume that we're going to have to pay for that down the road. Then there's the actual premium that data can offer. And so one way that you monetize your data is simply having it present and then receiving more money for your assets because there's a comprehensive understanding of what you hold, what you've built.
Okay. And who owns the data that you aggregate for your customers?
Great question. It is always the real estate developer. So unlike, traditional systems where data is, it's not truly sovereign, we're ensuring that the customer, even if they're using it for valuation purposes or it's trading somewhere, that the real estate developer maintains possession of their data. It's not going anywhere. Even when you're using blockchains, people ask me, well, aren't blockchains public? Doesn't that mean all the data becomes public? How do you prevent people from taking that? It's intellectual property. There's ways to navigate that, but at the end of the day, it's always the real estate developer. It's not only do they get to own it, but now they do get to monetize it as well with tokenization.
Yeah, that's good. And this is going to lead later on into some big questions about not only the ownership, but also some of the risks and dangers of us or you guys collecting this data. So we'll get into that in a minute. And Doug, I'm going to get to you in a second, but Harold, why don't you go ahead and describe your platform in terms of from the transactional side and how you collect data and how that's going to work as you unroll out in the counties in Texas.
So I love the conversation. I love where this is going. What I want to try to do is take a couple of steps back, because in the context of big data, it's Stoneark's ecosystem. Big data refers to a massive, complex set of real estate information from just the real estate asset itself, financials, the legal, the transactional information, some of what's being discussed here, that are continuously collected, processed, analyzed, and enhanced for transparency, right? Efficiency and security in the real estate transaction. So Stoneark leverages the big data across multiple dimensions to transform the commercial real estate industry. And we'll be moving this into residential as well. But we're doing it by integrating the digital ledger technology and those AI-driven insights into a decentralized record-keeping systems. So the key aspects that we look at in that regard are volume, velocity, variety, veracity, and value. And how we go about those data sourcing is because what we've done and what we're implementing is we've integrated in with counties, the state of Texas, the counties within Texas, not all of them initially, let's be transparent here, and cities within the counties. So we have data ingestions from we call it the government entities, all the county records, the deeds, titles, zoning laws, liens, I can go on. Right. Yeah. And in addition to that, because we're integrating with funding sources that originate deals, we have loan origination, funding approvals, historical cash flows, property valuations. And then when we start looking at the transaction data themselves, we collect it from the buyers and sellers, their behaviors, their market fluctuations, bid history, we're actually capturing geospatial data. So we had GSI mapping, location indicators, flood zones, hazard risks, regulatory data, compliance, regular SEC filings, real estate law updates. We're integrated into all of these things, but we're also adding that user generated data. So these are the different types of source data that we are ingesting within our system. And some of those use cases that we have that we're implementing within StoneArcs is the automated property valuation, fraud detection, risk mitigation, smart contract execution, market trend predictions, automated due diligence and compliance checks. So those are some of the big buckets, right? And the big data infrastructure, well, it's digital ledger technology because we're dealing with the tamper-free thing. And the machine learning and the algorithms that we're implementing small. We're maturizing over a 2-week iterative cycle on these things.
Okay.
We're leveraging some of the pretty advanced technologies to get all this done.
So you have an opportunity with your data aggregation to monetize it, correct?
We are actually monetizing it. Here's the key: we monetize it.
Yeah, go ahead.
The way the monetization is occurring is we're doing it through data sharing with all those key entities that are part of the deal. We see 4 primary resources for data transaction. It's the buyer, the seller, the funding source, and the government. I say government, but we can say counties, cities, you get the idea. So those relationships, we're cementing them with the property owner. We are the steward of the data. We don't own it. The owner of the data is the current property owner themselves. We aid in assisting them in the monetization of that property data.
That's the key question I was going to ask. I think you answered it. Who owns the data? You don't. You're the steward. So the data is owned by
the property owner.
The property
Whoever
owner.
owns the property, right?
Okay.
Whoever is in control of the ebb and flow of ownership of the property. Right.
Okay.
The funding source is not the person that owns the deed and title. We are not. I want to be clear on this. We are not tokenizing the real estate asset. We are digitizing every step from search to settlement.
Yeah.
As it relates to property, and then we're adding to that data sharing optic with the property owner. So we're able to almost eradicate taxes, the tax valuation. And some of the models we're seeing we're looking at 60 to 75% tax reduction on just the property itself.
Okay, excellent. And Doug, getting back over to you as the data scientist, anything, a couple of questions actually, anything to add on the definition of big data? And it just seems like a few years ago, big data didn't exist in our lexicon. It was data. Now it's big data. You know, it's kind of a hype thing a little bit, but do you want to add a little bit more comment to the big data thing? And then the other question is, this is one of my pillars, the pillars of my thesis. You cannot have data without digitization. Is that correct? Or can you?
No, I mean, that's the form we need to process it. So big data it's always been there. It just changes. It is, in my career, it has grown by a factor of 1,000. When I started, the first database I started with, I built a database for Hertz Rent-A-Car, and it had what we thought was enormous. It had 1 gigabyte of data. Now we deal with databases that have 1,000 or 10,000 times that volume. So big data has changed from the 1980s to the 2020s and will continue to change. And it brings in now text data and sound data and heartbeats and CPAP machines reporting data and all of that stuff. It's just, we're awash in data. Everything has data associated with it. What we do as Swarmalytics is we gather up a bunch of that stuff, much of it public domain, and turn it into this database of 16,000 pieces of information about every property. A lot of those are simply proximity, because in real estate, the old saying, location, location, location. Those are the three most important things. So we have distance of every property to the nearest toxic waste dump, the nearest beach, the nearest state park. All that data just goes into the soup in order to be turned into something more valuable.
Yeah, so digitization, I guess the question then is, how do you scrape that information off of, if it's digitized, AI and so forth can scrape that information for you.
Yes.
If something,
Well,
yeah,
some people have been nice enough to do some of the pre-processing. For example, we bring in satellite data. We could have algorithms that are digesting the satellite data, but the government's been nice enough to do that for us. So we have what's called canopy data. So we know where all the trees are in the United States and how many of them are on my property and things like that. So that is pre-digested from satellite, still digital, but down into something where every 20 by 20 meter piece of land in the United States, I have how many trees it has.
Okay, I think this is a good segue to for you and Lucas to kind of which I think is going to be fascinating to show us how that works in application.
Okay, Lucas is our Chief Operating Officer and is better at running our demo than I am, so I've asked him to join us. Lucas, can you share your screen?
Yeah,
Lucas,
let me share our product here. This is called Land Discovery. Let me share my screen here. Okay.
So the problem this solves is someone who is building needs land to build on. And the old-fashioned way is to go out and hire someone. I see it, Lucas. Someone would go out and hire someone, and they'd knock on doors or make calls. And hey, Farmer Smith, do you want to sell your 200 acres? Blah blah blah. And it's a manual intensive process. We apply our 16,000 pieces of information, run it through an artificial intelligence algorithm, and basically we have scored all of the properties in the United States as to their likelihood of being developed into residential communities or apartments. So Lucas, you're going to show us this in operation.
Quick question, Doug. The data you collect, it's 100% public data pretty much?
No, we have private sources that are paid for. For example, we have the purchase history that Mr. Smith sold this piece of land for $500,000 to Mr. Jones and things like that. So we have multiple sources. The government is awash in data and it's free and it's public. So that is sort of the backbone. What we're looking at right now, that's all public data, the highways and so forth around New York. But other sources of data are proprietary, and we buy, and then we create data. We are a great creator of data. I was mentioning that we are currently scoring every property as to its likelihood of being damaged by fire or flood and so forth. That is data we're creating, and it goes again into this giant pool to be analyzed.
Okay.
Lucas?
Sure. So this is Swarmalytics Land Discovery. This is our AI tool for land acquisition. We start out by selecting which kind of AI model we want to use for this particular project. We have a model for residential properties, apartments, and we're in the process of developing additional models for things like industrial properties and office properties. For now, let's look at residential properties, and we'll select our geography. A couple people have mentioned Texas. That's where I am too. So let's take a look at Travis County, where Austin, Texas is. We'll wait for our screen to load here. We can see here that we've already got 16,000 properties that we can look at, but that's way too many. So we will adjust our score. As Doug mentioned, we score every piece of vacant or agricultural land in the United States. In this case, since we're using our residential model, that is a score based on how likely that property is to be developed into a residential property in the near future. Those scores are then converted into a easier to understand ranking from 0, which is very unlikely, to 100, which is very likely. Let's look at properties that score between 80 and 100. So we adjust our score filter there. Okay, down to 10,000 properties. We can narrow that down even further. Let's say that I'm a land developer and I'm only interested in properties that are at least 10 acres. It's got to have sewer access. It's got to have electric and road access. I don't think that any government-owned properties are going to be sold to me, and I don't think any corporate-owned entities are going to be sold to me either. So let's exclude those right off the bat. Already, we've narrowed our search down from 16,000 properties to 74. We have, I think, about 30 additional filters that you can use optionally if you really want to be particular about what sort of place you're looking at. This can be things related to the topography, highway access, lake access, the school quality. How good are the schools in the area, the crime rate, things like that. I'll put in, let's say that it has to have a assessed land improvement of at least $10,000. We wait for that to calculate. Okay, 33 properties. From here, if we've narrowed down our choices with the filters as much as we'd like to, we can pick one of these zip codes in Travis County. Let's look over near Manor in the eastern part of the county. Wait for this to load, and we can look at individual properties and see which one we'd like to invest in. We can look at, for instance, 20758 Ed Ackland Road. Let's take a closer look. We can see that this property is owned by Donna Bartolacci. That's the address, latitude, longitude, and this is the boundaries of this particular parcel. We can switch this to a satellite view if we'd like and say, yeah, that does look like it would be a pretty good place to build a few houses. If we want, we have some additional information here. Again, things like the school ranking, the flood risk, those sorts of things. If I'm a builder and I want to see where my competitors are building, we do have markers here for things like, is Ashton Woods building somewhere in this area? Yep, they're building up further to the north here. And once we've finished, we can export our data as a CSV, both in terms of a basic output with just the need to know information, or an expanded output if you'd like to sort of perform your own analysis, and then you can download your data just like that. And that's the tool.
And by the way, we have one model here that is driving it, which is what properties look like they will be developed. We could build another model, again, taking all this data and restructuring it and so forth, and predict the likelihood of someone selling the property to you. So if the property, the woman who owns that property, Lucas just spoke to or just displayed, if she is 86 years old, the chance of her selling that property might be very different than if she is 37. So we can, again, take all this data and repurpose it to have a different, what we call dependent variable, a different outcome. And we can have multiple scores where somebody can say, okay, I want both a property that's very developable and one that is likely to be sold. And then we could layer another model on it to predict the sale price of all of these properties. I've got a budget. I want to buy, what was it, 10 acres, Lucas? I want to buy 10 acres. And let's see, around there, I don't want to spend more than $200,000 on it. So we could apply, again, cooking down all this data into a new piece of data. That's what the modeling does. It creates a new piece of data. Here we've got it creating probability of being developed. We could have another one, probability of selling, and another one which is expected sale price. So that is that, John, is what our demo is.
Yeah, that's terrific. This reminds me of a question I have written down here. It's called the 80-20 rule, and I'll throw this out to everyone. My understanding is that the 80-20 rule in data is that 80% of a project's timeline is spent on data prep, and it leaves and you only get 20% for analysis and build business and model building. If that makes sense, does that sound correct to you guys? 80-20 rule?
I'd say model or data gathering. The thing is, the actual analysis is incredibly quick. As computers get faster, the analysis gets quicker. So in building that model that we just saw Lucas using, it probably required 5 to 10 hours of machine time and less than an hour of man time to create that model, because it's just, we spread it across many different processors and we just beat the data to death in an iterative fashion, finding the correct model.
Yeah, and I think the efficiencies with this will increase as advanced AI algorithms continue to develop. And that's one of the pillars of my thesis. I mean, it's going to get faster and cheaper, I would think.
Yes. And we're going to gather more and more data.
Yeah. Harold has to leave at 5 to 11, but 5 to the hour. But I just wanted to ask Harold, how is your platform going to be using AI or any algorithms to support your data aggregation and analysis? Harold?
The short answer is yes, right? So we've spent years establishing international patents on the holistic process of property transactions and between transactions management and development. So we've actually been working very diligently. We have a large amount of algorithms. Our smart contracts are off the rails as far as how many we have, as far as how many algorithmic models we're leveraging and which ones we're using. We don't have enough time to go through them, right? So when you start talking about some very intimate algorithmic models in just doing property valuations, in our demonstrations that we shared with specific counties and assessor districts, we showed them the algorithms and walked them through, and the level of accuracy far exceeded their expectations. And it's actually working to do a few things, normalize that bell curve on taxation, right? And so we're consuming so much data in this process that our systems are quite large. It's a fascinating opportunity. It's such a white field. And what's fundamental is, being one of the original founders of the Texas Blockchain Council, the level of intimacy that I have with what's going on within inside the state of Texas itself is shown to be quite valuable. And the legislation that's been passed and is in play to aid and support just the transaction of real estate property onto a blockchain has been valuable and helpful. Just continue to grow and maturize. Yeah, and the data that you gather, the information, a lot of it is public information, the county's records, right? So we have, obviously everybody can collect county public information. That's pretty easy. Where the challenge is where you start getting into that intellectually owned IP data that people have. So we're creating an environment where we're showing them how to monetize that data and generate revenue that they've never seen before, from commercial even into residential. So it's going to be phenomenal when we launch residential in the second, it's probably about the start of the third quarter of this year. We're going to be showing residential owners how to generate money on their own property, and they don't have to be an Airbnb. They'll be able to do it through data sharing opportunities through different entities. There are people that want to buy their data, and we're going to help steward it, and they'll own it and generate money. Think about this. You'll get mailbox money by living and operating your own home in an effective manner. In our ecosystem, that provides that.
Let's get the data out of the hands of Zillow and CoStar and put it in the hands of the consumer.
Exactly. The property owner will have that.
I want to, pick a question over to Jo Bronckers, because he's in a field which is, I think, kind of new, and the European Union is far ahead of the United States on it. And this has to do with silos and interoperability. From your view, Jo, there are different developments on data interoperability for the built environment. And there's a lot of silos. And to what extent is it possible to create a shared vision and common data infrastructure? In other words, how can we avoid dismantling current silos to create new ones on a different level, or a level of the circular economy? And then I'd like Matthew to kick in on that after.
Yeah. Well, we were doing really a lot of research on that, and we were involved in many projects. And I want to make a comparison with the videotapes. Everybody knew from the past we had different systems: Betamax, Video 2000, VHS. And if you wanted to access the data, you first had to ask yourself, what is the infrastructure that I'm going to use to get access to the data? What we see, all the examples that Lucas showed us, that Harold was talking about. One question I had to Douglas: how do you aggregate the data? How can you guarantee that you have the latest quality? I always say it's not only the three location dimensions, but there's one important fourth one. That's the time dimension. How do we know that we are looking at the latest set of data, and how are we looking to the last updated set? So that is always a challenge. And when you want to aggregate data from different silos, from different sources, how can you combine them? That's always very, very big issue. And people, I think this will work if we can turn it into the revenue side, the earning side for businesses. If you, like Harold says, how can you create income? How can you have a better earning with your property? That's what people like. And then if the answer is yes, data help me, then people are interested. But the big challenge, how can we make data interoperable? And my view on that is very simple, actually. I try to explain it in 3 sentences. I think if you look what we have silos now. And silos, they're developed for proprietary solutions. They use their own identifiers. It's difficult to combine them with other silo data that have other silos. So what if we can aggregate those data to an interoperability layer? And this from a really as holistic perspective as possible. We just aggregate them to that level. And then we are going to clean the data. We want to add some ontologies, some unique identifiers, so that they can become universal applicable. On the moment that we did this, actually, then we can create on top of that entirely new data sets, enriched quality data sets. And those can be sent back in the same silos, but then they can be easily become interoperable with other silos. Actually, we pull down the walls of each silo. People don't see this. The only thing that we do is we put an infrastructure layer in between. And why is it important how I started? The Betamax, the Video 2000, and the VHS. There's so many projects who see the value of making data interoperable. But I think we do a big mistake if we want to get rid of silos and create infrastructures that in itself become silos, because then we create this scattered landscape. And if something is there that we learned in the past, if you want to create an infrastructure that really facilitates interoperability of data, we should come to a universal solution for this. So that's the reason why we are collaborating really a lot with universities to combine the latest insights and try to convince everybody to come to a common sense. These are the principles. If we want to create holistic data exchange, these ontologies, this is the way how we would like to work with identifiers, and this is how we can then set up those higher quality data sets. If everybody applies to that, we have a very simple solution.
Yeah, this is interesting. You mentioned a word called universal sharing, or universal infrastructure. Matt, you want to jump in? Do you have any comments on this in terms of how that, how we can share data across the board with others in the US and then jump over the pond over the European Union or to South America? Is it possible to have a universal global infrastructure communicating with each other with data?
Well, first, I would say that silos exist on multiple levels. There's silos of software, silos of data, silos of practices, and we have to tackle each of those individually.
Yeah.
And if we can do that, then you're going to see the standardization that the real estate industry needs and that private markets need, because I think a lot of the issues stem from the fact that owners and developers are left to their own devices. And without proper regulation or expectation or standardization, then we can operate our properties and manage the data of those however we want. There's been some efforts to mitigate that Wild West atmosphere, especially in data. If you look at the golden thread ideology or ISO, international standardization, this has helped to set an expectation for what information should be collected and how it should be collected. Another example, so what should information look like at the handover of property?
Yeah.
And it's one thing to set that standard. It's another thing to help everyone meet that standard. And this is where you have to monetize it and create that financial incentive where there will be market premiums if you abide by all the expectations of how information should be collected, stored, credentialed, and then moved between parties. So I think we just need to make it more clear why it's beneficial to practice these processes and do things the quote right way.
Yeah. Harold Hurd has
actually what Matthew says, there are two things. You can create new incentives, but also try to remove existing obstacles. And the solution that we advocate for is put something in between, a kind of a linking system. So then you can keep all the different identification systems that everybody has in its own silos, but you can connect them. And making the connection, that is one big step forward, I think.
Yeah, I think this is a terrific discussion. Harold Hurd has to jump in a few minutes here, and I thought I'd give him the opportunity. He has another meeting to go to. I thought I'd give him an opportunity, Harold, to leave us some parting words of wisdom before.
Well, thanks, John. I don't know if it's words of wisdom, but I'm intrigued by the interoperability conversation. So, see, when we built StoneArc, it's designed to be interoperable. Although it's a digital ledger technology, it powered and the real estate transaction and a transaction platform, we're ensuring that seamless integration with government systems, financial institutions, third-party property management solutions as well. We're doing that through a combination of APIs, smart contracts, and just the tendency nature of the decentralized technology ledger, right? So StoneArc is bridging those disparate systems and facilitating that secure real-time data exchange across the real estate ecosystem. This is not an easy undertaking. A lot of points have been brought up, right? I'm working with the ISO. I'm working with several standards bodies in establishing what could be real estate ERD schemas. How do we interoperate? What's the best approach? This is not an easy question because what we're dealing with is not a single entity. We're dealing with international controls, countries of different laws and regulations and rules. I think we'll be able to get to a point of abstraction on what that interoperability looks like. As far as data sharing, that's where it gets really super interesting, right? Because who owns the data? Property owners. If the property owners own the data, are they wanting to have that type of interoperability? I'm not saying they don't. I don't have an answer. But we need to think about those types of things. We need to take corrective, constructive action in moving that forward. I think it's imperative But I think what is really key and can drive success holistically is to get to one systemic, structured approach, abstracted, of course, to make sure that we have a baseline to build upon. Because again, the Netherlands is going to operate much different than Texas, right? Even Virginia, the state of Virginia, operates completely different than Texas. Every state within our own union operates differently, and they're all operated differently by local legislative activity. And so we've got to be adaptive, but we can create that baseline of what that looks like. And as Stoneark continues to maturize, we will be moving into the operational side of the equation. We will be moving into the development side of the equation. It's just part of our nature. We're taking a holistic approach to it. We're looking at that ecosystem, not the owners of it, but the ecosystem where we can bring all these great opportunities together to really kind of drive success holistically for the people that own these assets.
Yeah, I think the ecosystem is actually a very good key word for that. We're approaching the 60-minute mark, but we thought initially we could run over a little bit and continue the discussion. The panelists okay with that? Would you like to continue for another 10 minutes?
May I reflect on what Harold says? Because he touches one of the biggest challenges. I think there's so many initiatives, they see it as they see we are in the world to solve this standardization, and they see it as their own earning model. And I think the moment somebody sees creating an infrastructure as their own earning model, I think this is the moment that it won't work. Because they think they can actually dominate the entire world. That won't work, never. I think we should really approach this from a neutral, common sense point of view. And that's the only way I think how it can become powerful. And I can say, we from European side, we look to the American side. We thought if we can somehow create a system that works both in the United States and Europe, we have pretty a big part of the world. So we collaborated with the Real Estate Standards Organization in the United States. They are the working group working on the unique property identifier. And there they wanted to identify parcels. So I see this more two-dimensional approach, where we in Europe, we wanted to go to a four-dimensional approach. But we said, well, let's try to adopt to the principles. They start with the 2 dimensions and enrich that with the 3rd and the 4th dimension, the 3D space and the 4th, the dimension of time. And that's how we build something that can be easily applicable on both sides of the Atlantic. And
it's fascinating, Joe, that you bring that up like that. It's the challenges that we have is that if as a property owner, and especially in Texas, property rights are number one. I don't have to disclose anything about my property that I want. And in some areas, in some countries, European countries, it's full disclosure about everything going on, even inside the states of the United States. This is why what we're doing with Stoneark, it's state-specific implementation. Every state has its own infrastructure stand-up, so it maintains that high degree of property rights as defined, described, and prescribed for that given state, so that we can create that interoperability layer across the states, but that data never leaves the state of which it's owned. That way, we don't have to deal with other abstracted regulatory concerns. Here in the United States, it's an interstate commerce clause, right? And if we're moving data from state to state, we have a challenge. So we have to isolate it for every state and make it unique. These are not easy answers to formulate to actually drive, but we're starting incrementally. We're not dictating. And at the core of everything we're doing, the property owner owns the data. We maintain that integrity, period. And we align it with state law, Texas law. And as we go to Florida and other states, we'll align to Florida law, whichever it implements. And I think that's the key delineator here. And if we can find a common approach in getting in that model, I think we'll have a holistic, more successful approach on adoption and implementation and gain efficiencies. I will tell you that Stoneark is a velocity of capital implementation. We are going to impact positively the velocity of capital in the state of Texas. Keep watch. With that, I got it, gentlemen. Thank you for the time.
Thanks so much. We have a question, an audience question I'd like to slip in here real quick. This is a question from Jason down in Brazil, who's also a member of FIBREE. And Jason's question is, and I'll throw this to Doug. How do you see the importance of real estate oracles for tokenized properties? 2, and also, do you believe that the use of DNFTs for real estate will increase significantly?
It's just more information. It's again, information is exploding, data is exploding, and data becomes information through the analysis to come up with something that is useful. So I don't have a tight answer on that other than everything. We're interested in all forms of data.
Okay.
And if somebody has more that comes along with a certain data structure and so forth, welcome,
Okay.
I've never found data I didn't like. I've found lots of data that is irrelevant to a particular question.
Yeah. Does an oracle fit in with data?
Sure.
Not collection so much, but storage.
Sure. Absolutely. And that's I think the sort of how you store it seems to be a battle of 20 or 30 years ago. There are lots of different ways to store it, and it really depends on how you're going to use it. If I need sub-second answers to something, I'm going to arrange my storage and technology differently. Going back to one of the previous questions about how often you update things and so forth, that is all driven by economics. We have to keep economics in mind in all of these things. For example, we pull down lien data. When somebody puts a lien on a house, we'll pull that down. It could be weekly that we pull that down. Other things are less time sensitive, and a transfer of a house from one person to another, if we gather that data once a month, good enough. A lot of the government data, the boundaries of a county may change every 20 or 30 years or something. So that's not urgent.
Okay, so Doug, would you explain what a data room is and how that works? A data room?
Yes, I heard about this question. A data room that in my world is a place where I keep documents that are critical to, for example, me receiving funding. I'm not sure if that's the same data room that you're referring to.
No, I think it is. I just was curious if it actually
good.
Yeah.
I guess right.
Okay.
Yes, a data room. My company acquired another company, so the merger documents would be in the data room. The articles of incorporation, previous tax filings that show that we're up to date on our taxes, all of the legal stuff that that would all go into a data room, as would pitch decks and other things.
All right. It was a trick question. You handled it very nicely. Thank you. Well, here's another one. What is synthetic data?
Synthetic data is data that you basically make up. That let's see, what would be an example? I could create synthetic data about estimating the incomes of everybody in the county that I live in. So I could create synthetic data that it's okay, I don't know how much this person makes, but based upon what I do know, here's a guess, and I might use that synthetic data for some other purpose.
Okay, good. You know what? I have to correct myself. I've been pronouncing it data. You're saying it's data. So I stand corrected.
No, you're assuming that I'm right, which could be a false assumption.
Great. This is fantastic. We got a few more minutes left, but I certainly encourage any questions from the audience. No question is always questions are always important.
I've got a question. Am I
okay.
audience?
Please.
No, the economic side of the story of data. But I always, when I speak to real estate people, they consider data as this the cost side. It costs me money to produce data and have insights. If I do an investment of, let's say, 10 million, I'm happy to spend 100,000 on creating data, insights. But I would like to bring it from this cost side to the earning side. How can I create business models, earning models, that I can have higher value of my properties or create better value with my businesses? And how will data become an enabler? Because on the moment that we can convince people that you can bring it to the earning side, I think the willingness of investing in data will tenfold immediately. And that is, from an advocate from data exchange, that's the point where I would like to come in the next 2 or 3 years.
I think some work that I'm doing right now is a great example. Insurance companies live and breathe data. And I believe if a property owner could show that their house is constructed in such a way that when the hurricane comes, even though they're in Florida, the roof will not come off the house, that data could be leveraged to reduce their insurance rate. So I think that's a great example of where somebody could have data and leverage it financially.
Yeah, and I think all that are sitting here, everybody of us has his own perspective and his own business model, how data can become valuable. I would actually call everybody, let's put these stories together. Let's try to distribute those messages, because that's the way how you can convince real estate people who are a little bit old-fashioned, how you can convince them to take a different view, a more strategic view, and how data can be used in their advantage.
Yeah, well, I agree with you. One of the biggest complaints in the US is real estate agents having to pay for data, you will, through companies like Zillow and all these others. Matthew, what do you think? I mean, you've got your hands in data, and you're offering a solution because you're monetizing it, but you're monetizing it for the developer who owns it. You're helping them monetize it. So addressing Jo's question, what are your thoughts on that?
Well, first, I'd actually like to circle back to the question that was in the chat, which was the relationship between real estate oracles and tokenization, because this is what building is.
Yeah.
The ability to put information on chain in real time and ensure that the information is validated and trusted is extremely important. So there's a very tight relationship. There hasn't been. Traditionally, digital assets sort of exist in their own universe while we have what's happening in the real world. But there's been more adamant efforts to strategically collect, store, and use that data, turn it into information, and therefore value. And this is, if I can comment on the data room, this is where a data room goes from the traditional Google Drive or Dropbox into an actual intelligence layer for properties, where they are frequently updating, they're verifying and structuring information. And this could be any sort of data that's coming in as early as inception of the property, design, you have BIM and these digital twins to collect all that information, or data, I should say. It starts as data and turns into information. And then as the project is being developed, then when it's functional, you have IoT, you have sensor data that's coming in. You want to make use of all of this. And this touches on Jo's point of 4D data. You can take a snapshot of something in time. And that's like what data rooms do now. And that's why they kind of fail as oracles, because what happened 10 years ago and that information I can't use to reinsure a property or to trade that property or to create a derivative out of that. So we need constant influx of data to make informed decisions. And then there's a lot of unique monetization. Insurance is actually something that we're looking at. So we asked the question, what stakeholders would be interested in good commercial real estate data to make decisions? Is it the lenders? Absolutely. It's going to lower perceived risk. Is it the accountants? Absolutely. It's going to make their reporting duties more streamlined, and then you can reclassify assets. It's investors and municipalities. Everyone wants access to good data, recent data, attested data, so that they can take action on that. Now, Since I went on a tangent there, I have to ask Jo to restate his question if I didn't answer it.
Oh, my question is more a call to action to everybody. We all have our data value models. What is the value you can create? But I would say real estate people, if they understand the value model for them, how they can improve their existing value models, and how they can use data to enable them to come to a higher level. And then you will have a complete different conversation about data, where they now perceive it more as a cost, then they see it as an enabler for enhanced revenues. And that's the conversations I would like to have. So I'm looking for examples, and it's a call to everybody. Let's share those examples that we see in our networks.
I think we're probably going to have another webinar on this, because that's a load of information. There's a lot to discuss.
Yeah.
You know, we're coming up to quarter past the hour, and I thought, so we're going over a little bit, but this has been terrific. Normally I have a closing question to sort of close out the discussion session, but what I might ask each of you is to provide a closing statement of some kind, something interesting and dynamic for us in the audience, and then maybe provide your contact information and how people can contact you if you like them to contact you. You can go ahead first with your closing comments.
And there's one question from Mac coming in. Do you want to give space to that?
Excuse me?
Do you want to go to Mac's question first?
It's not a question, it's a statement. Well done.
Okay, he raised his hand.
Okay.
Well, what I would like to say...
Thank you. I just wanted to say thank you all for the amazing session. Jo, real estate people, we're not old at all. We're futuristic and progressive. Again, I had a question, but I'm sure it will be answered at a later stage. Thank you all for the amazing session. Thank you.
You're welcome. Makram is one of our board, excuse me, one of our board directors in Dubai. Thank you for joining us, Mac. Jo, go ahead. Closing statements.
Yeah. Circular economy. I've seen the startups working on this are already doing it. I dare to promise that within, let's say, 5 years from now, we can make every home in the world 25% more affordable for everybody. And we do this by creating certificates of materials that can be reused at the end of their life cycle, by creating certificates that you can connect a digital certificate to an existing tangible material in a building that will stay in the building, but that can be traded. If you can organize a trade platform in those, you can organize an investment flow, a commodity investment flow, and this can help every home, every building in the world to become 25% more affordable. It is data that helps us reach that point, and therefore that's for me the most important reason why we should work more on interoperable data.
Jo, that's a very bold statement. And your contact information.
FIBREE.org.
FIBREE.org. Very good. Matthew Schneider, the microphone is yours. Closing statement and contact information.
Yeah, so real quickly, my closing statement is going to finally be a response to Jo, which is the call to action. And that's that we need to start talking about case studies. We need numbers coming out. And this is something that we've been doing at Building and through our partnerships with companies like Invenium, which is if you don't want to see people in real estate developers or owners and stakeholders treating data as a liability or a cost, something that they have to worry about, and instead something to invest into, you need to show a return on investment. And we are seeing that. You can reduce valuation time, you can reduce the cost of capital, you can increase liquidity, and these are things that, while not realized up front, are definitely worth it in the long run. Even implementing BIM can add a premium to the value of an asset, sometimes upwards of 25%. That's a phenomenal premium to realize on your appraisal. It's millions of dollars. So as long as we can demonstrate that information over time, I think we're going to see a lot more parties participating in our vision of standardization and just better data collection and use overall. So folks can get in contact with me primarily through LinkedIn. That's my bread and butter. If you look up Matthew Schneider, you'll see my smiling face actually wearing this suit in particular and a blue background.
Very good. Thank you, Matthew. Building Inc. It's both a noun and a verb. Doug, Please, closing statement and your contact information. Doug Newell. You're on mute.
Thank you. The closing observation, and that is the next wave of data, I hope, comes from breaking down the silos and having builders themselves pour their data into a common repository. We've started something called the Builders Consortium, and the idea is artificial intelligence eats lots of data on a daily basis. There are silos. Every builder, there are 2,900 builders, 2,600 builders in the United States. Each one has their own little silo. It's time for them all to pour them into a common area. They won't be able to see each other, so they will retain privacy, but the summation of the data can be used to do better AI, such as predicting how much their house will sell for, how long it will be on the market, and so forth. I can be reached at dnalytics@swarmalytics.com, SWARMALYTICS.
Perfect, perfect. Speaking of silos, and Harold Hurd would certainly attest to this. He had to jump for another call. There are 3,200 county recorders offices in the United States of America. And guess what? None of them communicate with each other. They have their own systems and they have their own software, their work processes. So talk about 3,200 silos. Harold Hurd had to jump. He's the CEO and founder of Stone Arcs. His website is live. He is launching on February 1st. He's launching his company. So that's something to keep an eye out for. So anyway, we've had a great time here. You know, I'd like to thank everybody for joining us. We're planning on doing like I said, this is the first of the New Year's FIBREE webinar. We're planning on doing several more throughout the year. And what I'd like to do next personally is a webinar, a workshop on AI for real estate, which I think would be fantastic because it seems to be on that hype curve where everybody's tuning into that. So I'd like to thank everybody for joining us. Stay tuned for the recording to come out probably in a week or so. It'll be available for review, no charge to download it. And that's it. Thank you so much for everybody. Happy New Year.
Thank you all.
Bye.
Thanks. Bye.